Oh, I'm gonna have to turn off my music. That sucks. I love music. What's up, Abe Nation? It's Marcel Kalinovic, Boss Blunts. We're going to get started on some fun due diligence here on Evergrande Bank, the entire stock market, China, Australia, United States, Germany, and everything in between. I got some special guests here today. Thankfully, we'll switch over here. What's up, Abe Nation? Boss Blunts, Marcel Kalinovic. Let's have a drink. Today we're with KENNA from the Bull House, as well as my buddies Gio, Glizzy, Elmo, and Trainman, and Funds Reaper. We're just kind of going to run through some due diligence here that KENNA's been working on for over a month and a half. Actually, and it's fantastic. It's called The Fall from Grace, The New Rome, and she's got a podcast called The Bull House. We're going to tweet this out, let some people get in here, so we're going to give it like 3, 4, 5 minutes or so. So if you're watching this for the first time on YouTube, you can skip forward about 5 minutes. So yeah, all right, let me send this out here. Thanks again for coming on, guys. Don't be shy.
Thanks for having us.
Don't be shy. It's all good.
I was tweeting out.
No, it's cool. I'm tweeting too. Don't worry. We're all tweeting right now. Oh, looks like I put the chat box right in front. What was that, brother?
So just glad to be here hanging out with you, man.
Yeah, same with you guys. It's always good to hang out with y'all. Fix up our little chat box here up top of the screen.
Appreciate you guys.
Space.
Hey, KENNA, how you doing?
I'm good. How are you guys?
All good in the hood.
Fantastic. What's up, Corleones? We got a couple guests here from the Bull House. I'm super pumped. It's my girl, Mary Jane, right here. So, say hi. She smells really good today.
That's what it's all about, is joining communities, right?
Yeah. Makes it fun. And it already was fun, but, I mean, shit. It's a lot easier to do this stuff together than to do it alone. That's for sure. Yeah, let me tweet this out real quick. I have no idea what's going on here in this stream, so my apologies to everybody. Oh, cool. We've already got quite a few people in here. Thanks a lot for coming out, everybody. We've also got some interesting news from Kenny Griffin and Citadel. Close that shit out. Sorry. Kenny Griffin and Citadel have made some interesting changes to their shares. That's for sure. Smoke them if you got them. Fuck lamp on. We got flame on. Plant on. Right now. Give us all a quick preview. What's up, Jeff, Moises, Doses, CBJ, Amaraya? Thanks for everybody for coming out. Dank, Pam, you guys are the OGs are in the house. I love it.
I think for a dose of animals, I think it's always a green day for Boss.
I'm a very optimistic person. So what can I say?
I mean, I'm looking at your plant and everything. It's always a green day.
Oh, that's for sure. That's for sure. My girl. She's growing a lot. Growing pretty nicely, actually. What's up, Ultra 8? Tony, Robert, thank you very much. If you guys don't mind, tweet this out. Share this out there real quick. Let's get it out there to as many apes as we can. I'm doing that right now as we speak. But it is dragging. I'll do it on this screen, actually. One thing I don't like about OBS is that instead of it sharing the link to my video, it shares this stupid link to get people to donate, and that's not what I want. I don't want anybody to donate unless they got money to burn. You know, I want them to see where the stream link so they could click on it.
Are you using Stream? Yeah, you are using Streamlabs. There's
Mm-hmm.
a way in the description before you go live that you can delete that and actually change that.
Yeah, but you know what I don't know is I don't know how to create the stream to get the link to share the link before I click go live on Streamlabs actually.
I think you have to set that up with your Twitter and it'll automatically do it.
Gotcha. Yeah, it's kind of complicated, so I'm still learning. So thanks everybody for your support. Everyone here, Ape Nation, Kenna, the Bull House, and everybody else that's been extremely supportive. Yeah, we've got some fantastic due diligence from Kenna here, and it falls perfectly in line with everything that we've been talking about. And sadly, it looks like China Evergrande Bank has suspended bond trading, and their credit has been downgraded again. So as of Thursday, September 16th, to suspend trading on onshore corporate bonds after a downgrade. This is a huge problem for the second largest property developer in China, you know, and a lot of the people, the banks that back these bonds are in America, such as Bank of America and Goldman Sachs. So these two banks, in my opinion, specifically based off research that I've done, are going to see a huge impact, as well as many in Australia. And Germany's GDP is going to be highly affected in a negative way as well, because they export a lot of cars to China, and also have a lot of imports from China. What do you think about the developments on the bond? How, you know, the fact that they're no longer able to, you know, trade these bonds?
I think we're gonna feel that in a couple months, if not next month, for sure, throughout the entire, like, not just our economy, but I mean Europe and everywhere. Like, it's gonna hurt.
Oh, absolutely, absolutely. So yeah, somebody said Dose of Animal says bond trading will resume on September 17th, but was just paused for the 16th. That's news to me. I'm gonna have to take a look at this because this article was just posted 15 minutes. Well, at this point, maybe about an hour at 12:40 p.m. September 16th. So that's 10:04 a.m. Greenwich Mean Time, I believe. So this is a fairly recent article here saying that Hengda received notice on September 15th that they were getting the bonds have been downgraded themselves. So they've downgraded the bonds as well as the actual credit rating for Evergrande.
Hell, I mean, I would compare that to '08 if you can, so that people kind of understand the significance of that downgrading and what that means for that bond market.
Tell them about Lehman.
You know what's interesting about Lehman, because they were the first ones not to be bailed out, right? They actually had to pick between AIG and Lehman Brothers. Which one was actually more intertwined within the financial communities, and which one would actually do more harm for the financial system. So they actually had to pick between AIG and Lehman Brothers, and Lehman Brothers got the short end of the stick.
And Lehman Brothers, I believe only had 200 billion. No, I'm sorry. No, there was a slightly different situation, but they had 500 billion in assets, and it still wasn't enough to save Lehman Brothers back in 2008. And over here, we're seeing a situation with Evergrande where they've only got 200 billion in assets, but have 300 billion plus in liabilities. So there's a huge difference there. The losses to earnings are already much different than they ever were for Lehman Brothers at that time. So I'm not sure what's going to happen there, but their dollar bond for June was trading at 29 cents, you know, which is up about 4 cents from Wednesday, which is not great either. So it's going to be interesting here. You know, they do have over $300 billion in liabilities here. You can see this from businesstimes.com. And they're working on debt restructuring. And if you don't know what debt restructuring means, that means bankruptcy in plain English.
100%.
They've hired bankruptcy attorneys. This article doesn't state that, but I've seen it on other articles. What's up, Rodney? We've got Kenna and El Corleones from the Bull House. Fantastic crew of individuals here. and they've got Kenna's got some DD that she's been working on. This is the Bull House. They've got a podcast on YouTube. You should check it out. Also on Twitter Space Calls. Fantastic group of individuals, super smart. Kenna, can you tell us a little bit about how you got started on this due diligence? Well, yeah. Tell us about how you got started. That really would be interesting to hear.
It's actually kind of interesting. Like, it's not. I like Rome. I liked learning about Rome throughout school, high school, college, whatever. And just, I really studied it a lot. And then just to start seeing the parallels, because I'm a pattern person. Anybody that knows me knows I love patterns. And so having been diving into the economy since January, I started piecing all these little just snippets, right? And something in my brain, you know, while we were my husband and I were talking, I was like, wait, we are literally like Rome right now. Like, and it's always been said that there's a theory Rome never actually fell, it just got relocated. And it was possible that the United States was actually the new Rome or the original Rome. And so I started piecing it all together and finding those very, very weird similarities to see what we were up against. Pretty much how those got started.
That is awesome. Yeah, and the fact that you're kind of putting it up there with one of the top civilizations of all time, and where are they now? So you think you make a great point there.
I mean, it's interesting because, you know, Rome, if you just look at Rome's military and how, you know, they were set, you know, as a empire, they overextended themselves. They, you know, tried to rule too much. They were everywhere. The Roman military was one of the strongest and most just outrageous in training and abilities and technologies that they had. And they just fell because of, you know, inward fighting amongst different groups. And you know, just the overextension is the biggest thing that led to their fall. And I see what we do as a U.S. military, and we're everywhere. Like, we are literally everywhere. And so with the whole thing with Afghanistan really tied that in together was the whole theory with Afghanistan in history is that it's the fall of empires. And so the fact that we were there for 20 years and our economy has just been tanking the last 20 years, trying to fund the war and everything, you know, also getting into Iraq, Iran, and Saudi Arabia, and Syria, and everything. Like, it's just a mess. So
it's a lot of wars. It's a lot of military spending, huh?
Oh yeah.
One could say that we needed it to boost our GDP after 2008, huh?
Well, and that's what's interesting. So usually wartime creates a lot of economic boost. So like if you look at World War II, they changed the factories over to manufacturing weapons and things for the war and everything. And so our economy actually did really well after World War II. And so if you look at 2002, our inflation was low. You know, we were actually doing really well as a country, and then it just kind of escalated from there.
Yeah, things got pretty rough with some of the situation that we have in this country. Could you tell us a little bit about this? Like, you know, over the last 2,000 years, it seems like we can't even get our shit together into maintaining like a stable society.
Yeah. So there's a few different things. If you scroll up a little bit, that's the easy breakdown of it. And the fact that if you look at the main basics of what caused the Roman Empire to fall and what we see in similarities to us is the barbarians, tax increase, inflation, instability for the political system, and poor defense. Those are the main few that caused it. The one that you were just showing, the big long one.
So one could maybe say that something like nowadays there may not be actual barbarians, but there could be terrorists, domestic terrorists, and COVID-19.
Exactly. So, you know, I chalk it up to the different riots all over. Like, think of Portland, right?
Yeah.
Down in was it San Diego, San Francisco? My husband just showed me a video not too long ago, you know, where this whole defund the police has happened, and people were going into Walmart and taking a bunch of stuff and walking out not paying for it. there was nothing that they could do because the
What a
police wouldn't
shame,
come.
right?
So there's just all these different instances where, you know, it's just lawlessness at this
And
point.
then,
And so yeah,
so the Romans also faced inflation, right? And what was most negatively impacted with the Roman people and their economies?
oh God. So with inflation, they had it twice, and the one that you have highlighted with Julius Caesar, that was interesting because that was a part of, they had a law talking about taxing the Italian land and buying Italian land and everything, and it fell by the wayside until Julius Caesar was like, enough is enough. We need to have this, um, you know, take effect, you know, because we're losing money and everything. But they also, you know, the next part, you know, later where the main collapse of Rome, farmers weren't able to, you know, sell their goods, and there were shortages on supplies. There was all kinds of stuff that similar to what we are seeing now, actually.
I see. Okay, yeah, that's so basically the inflation. It doesn't matter if it was 2,000 years ago, if it's today, or 2,000 years from now. The artificial printing of money is still going to cause issues no matter what.
Yeah,
And
yeah,
when you have trade issues like supply chain issues, whether it be in Roman times or nowadays, and you combine that with the printing of money, this is what leads to hyperinflation.
yeah, they actually minted coins.
Yeah, yeah.
They
The
were
Roman
minting
people
money.
minted coins.
It's
Exactly.
the same thing.
And what are we looking at now? A debt ceiling of $28 trillion that Congress is fighting about. And what is this $3.5 trillion social policy bill that they're going to argue about, you think?
So that is actually to increase the taxes on um, the super wealthy, the corporations, and large inheritances. This isn't really the middle class, lower class people, but it doesn't it does effectively hurt them because those corporations aren't going to take a hit at all. They're just going to up the prices of their goods or services and pass it on to the consumer. So again,
Right.
inflation, higher prices.
And who's the consumer? Let's put it quite simply, who's the consumer here?
All of us, the 99%.
Yep. Absolutely. Absolutely, we are. So no, yeah, this is an excellent read here on the Bull House as a subreddit. You guys should definitely check it out. If you go to Reddit, search for Bull House, Bull House. And as you guys have seen the crazy changes in oil price lately, aside from the hurricane, you know, what else is hurricane, you know, Ida, whatever her name was here in the Gulf of Mexico, destroying, you know, the majority, 16% of all of our national output of oil. And what do you think is going on here with OPEC?
So China just said not too long ago that they found 2 reservoirs of oil within their country. They just said that, so that means they've known about it for a while. And so with them, they are working with, you know, Russia and the Taliban and Iran, all of the different OPEC nations, doing some backdoor deals and everything. And so that would essentially uh, hurt our literal quote unquote petrodollar because the dollar is no longer backed by gold. We know that. So it really does follow the price of oil. And since we really don't control any oil anywhere, they have the effect to screw us on that one. Essentially thinking like, so if we're supposed to, you know, if China is actually supplying oil or has control of the oil fields in the Middle East or anything like that, so they essentially set the price, and they can charge us exuberant costs to actually get that oil here, and it's no longer tied to the USD because it would be tied to the yen, and that would essentially, you know, the price would go up, then we'd see an increase in transporting goods and services, whether it's by boat, by air, train, car, whatever it is, we would see that price hike because they'd be passing those costs on to us. It's just one of those, just keeps adding on, just keeps adding on. Plus, oil is also a product of plastic. So, it'll be, for some reason, as a world, like to use a lot of plastic. And so it just makes the cost of that go up too. Tie in the fact that we also no longer, we got rid of one of our pipelines, and the one here in the south it got hacked recently. So it shows the security breach, and people are, and we paid the ransom for it. So it just kind of opened up the doors for a bunch of BS. I can't hear you, boss. You're muted, I think.
Thank you for reminding me. So basically, you're saying that the petro-backed dollar is not what we're looking at because it's not linked to gold. So we're not linked. Was it Reaganomics that separated us from the gold standard back in the 60s?
Yes, I believe it was Reagan.
I believe it was Ronald Reagan, which a lot of people believe him to be one of the greatest presidents of all time, which could be the case. But I don't know how I feel about him separating.
It was Reagan.
What's that?
Reagan.
I say both.
What's up, brother?
I thought it was Nixon that took us off the gold standards.
Yeah, I was like,
thank you.
Roosevelt.
It was Roosevelt.
Roosevelt.
It was Roosevelt.
Suspended the gold standard. I was like, wait, Reagan was in the 80s. That's not right.
You're right. I'm so sorry. I'm just totally. It was an R. I apologize. That's why you guys are here to help me out because I'm a stoner and I forget shit. So yeah, though this is an incredible due diligence, man. So the United States, you're saying that we're now $27 trillion in debt, and inflation is kind of taking over here. I've said it a bunch of times. What do you think will happen if the debt ceiling? Obviously we've already hit the debt ceiling, and there's a cap on it, right? What do you think happens if they don't raise the debt ceiling? If Congress can't agree on this $3.5 trillion package, if they can't agree on this infrastructure bill, and we end up seeing a government shutdown on October 1st, or even if we don't, but it comes close, what do you think could possibly happen to the stock market and the economy?
I'm sorry, can you repeat that? Because I'm reading.
Yeah, absolutely.
I thought it was
what do you think will happen to the stock market and the economy, whether or not we default on the government's debt, whether or not the government actually shuts down on October 1st, but just coming close to the cutoff date of the October 1st government shutdown? And what do you think is going to happen or could possibly happen to the stock market and the economy?
Anytime that there is any kind of uncertainty with the nation's debt or anything like that, it does create a lot of uncertainty in our markets, and domestic and foreign investors will not want to invest into our economy, so it can actually tank it. The debt
that's going to scare away investors, right?
Yeah. And so, guys, what I was thinking of, yes, it is Nixon, but so Roosevelt, I remembered this. They actually suspended the gold standard. That's what I was thinking of in 33. So yes, Nixon did take us off the gold standard, but there was a suspension. I had to remember. I had to look it up.
Here's the thing: is you both right? Is just there's so much complication with history and the way that it's actually told to us that sometimes we've got to check into it a few times. So thank you both, Funds Reaper and KENNA, for that. But you guys look at our inflationary consumer price index.
Oh my God! Right.
What the hell?
The other thing I was gonna say with us, if they do end up not raising the debt ceiling and we default on debts and everything, you have people on Social Security, the military, federal employees, civilian or whatever, veterans. All these people will stop being paid. Like those are the biggest things. When it comes to not being able to pay their debt obligations, or those people, just average people not being paid out would hurt drastically. Speaking as a military family, that my husband's a vet and we do get his VA payments every month.
You guys rely on that money.
Oh, 100%.
Right. So while Kenna's on that subject, why don't we go take a look at September 14th's most recent United States Treasury balance sheet, because we got it right here. And we all know that they've already stopped paying a lot of people, a lot of things. The United States government, the United States Treasury spends an average of $500 billion per month over the month of July and August. And we're currently looking at, they've only got $211 billion left in the bank as of Tuesday, September 14th, is the most recent report available from their balance sheet. We began the month of September with $355 billion. And in order to get to that number, because we were way below it, they had to take $75 billion out of the economic recovery programs. They have stopped paying for Medicare payments. Your doctors and insurance companies, for anybody on Medicare or Medicaid, is not getting paid. They paid $0 on Tuesday towards Medicare prescription drugs. Speaking of Social Security Administration benefits payments was only $50 million on the 14th, and so far they've spent almost $959 billion, almost $1 trillion this year on Social Security, but they cut that drastically, and on Tuesday, the 14th, they only paid $50 million. They're paying the bare minimum in order to get by. And also we know FEMA's going to need a lot of money that Biden promised them, but the Treasury can't give it to them. They only gave him $12 million on Tuesday. So we've got interesting times ahead for everybody here. Well, you've had a fantastic due diligence here. So what is your take on the CPI and the Shiller PE ratio?
Jesus. I'm sorry.
It's
I
okay.
had Tyler talking.
Yeah, no worries, my bad.
about the gold standard and everything. So I can fill you guys in just a sec on that. So
yeah, that's good too.
With the CPI, oh my God, with the CPI, there's all kinds of different factors. They never use the same factors when it comes to CPI or anything like that.
Right?
They never use the same stuff. So whatever they were using, last year, the year before that, they never have the same factor. So we never get a true number on it, right? See, look, Investopedia.
Yep, Investopedia is the first one to call it as controversial.
100%. And so, it's just one of those really just off the wall things. And how can we truly get an idea of CPI when we've had stagnant wages and cost of goods and services go up no matter what people are making? And we had lumber prices that just went skyrocket, right, for no reason.
Lumber prices.
There was a reason. You had fires, you had the hurricanes and everything, like natural disasters and
well
whatnot.
You know what, not to cut you off, but the Donald Trump tariffs on lumber for Chinese lumber and Canadian lumber caused American companies to withhold their lumber even further to raise the price. So American lumber companies took advantage of the rising prices by holding it back to they basically short squeezed lumber, if you believe that shit, to get it up so high.
Oh yeah, so and it's really interesting. So we were in the middle of renovating an RV, pretty much a full gut, right? We needed a bunch of lumber. Thankfully, we bought bulk lumber at the start of the project. So whenever we did need a piece here or there, we actually watched the prices go up while we were doing that project. We were like, why is this 2x4 this much now? But yeah, he was just confirming. Yes, it was Nixon. He's a history buff with his photographic
memory.
Thank you,
guys.
He remembers
so Nixon
all this
separated
stuff.
us. He's saying Nixon took away the gold
and
standard.
it was for layman's terms, because I'm not going to do it verbatim because he's too good at it. France basically called our bluff that we didn't have enough gold in reserve to back our dollar, and so they basically threatened to take us off as their reserve currency, and that's what started the whole mess of us being we had to take off and say we were backed by gold, and that's when the petrodollar became a thing, in layman's terms, from what he said.
That's fascinating. I can't believe it. So what you're saying about the controversy inflation is the fact that they changed it, right? It says here previously, Investopedia says it was determined by comparing the price of a fixed basket of goods and services spanning 2 different periods, which it was previously the cost of goods index. And then over time, Congress embraced the view that it should reflect changes in the cost to maintain a constant standard of living. Then they made the CPI evolved into the cost of living index. And they continue to revise it. They're making one revision after the next in order to remove or add different things into the basket that they're calculating it. And they're going to do it again as recently as 2022, from what I was reading in a recent government report. I just don't have it in front of me right now. As January, they're going to revise it once again.
Oh, of course. I mean, because, why not? We just make it look as good as possible. That's why, I know we post, inflation's at, 5.4% or something like that. I don't trust that because they're not using the same factors at all. They could be like, oh, lumber's too high. Okay, we'll take lumber off and we'll do it with soybeans. Or
they took out used cars and they put in energy and other, things like that, and food. You're absolutely right. Let's take a look at the inflation numbers. Damn, look at 2021 and look at 2008, what just preceded the market crash. What the fuck are we looking at? The exact same things. Except this is going to be a lot more stretched out. This is going to be a lot further here. So I really think that this debt ceiling issue is what's going to cause this thing to pop, sadly. Because this is not a sustainable. We've reached hyperinflation levels. They're just lying to us to pretend that these numbers are lower than they really are by reevaluating the way that they calculate inflation, right?
I don't know if we've hit hyperinflation yet, because hyperinflation's by 50% when it's at a 50%. I think we're sitting at a 20-ish%, maybe 25.
And I kind of agree with you there, but then you've got to also look at the price of used cars, 47%.
Oh, yeah.
Right? The price of energy is up 33%. So certain things are in hyperinflation. It's just certain things are not, thankfully. So that's kind of helping to offset that and such. So, you make a wonderful point. It may not be, we may not be in Venezuela, but it's looking worse and worse every day and every week with the way that these estimates are being cut.
Yeah. So DA Soccer is in the comments saying, so I hear SPY puts. So that's fascinating that you say that. So with everything I've been tracking since February, the big players, BlackRock, Vanguard, Citadel, .72, all these people have had puts, massive out-of-the-money puts on the SPY, the Dow, the NASDAQ, and they've been actually getting into the inverses and putting far in the money call options on all of these inverses and buying stocks in the inverses, which is interesting because the inverses notoriously lose money. That's what they're known to do. And so the fact that they've been betting against our economies as far back as I can say is January, February. I didn't track it all last year at all, but yeah, the hedge funds are betting against our economy. They're shorting the bond market. They're, it's asinine.
Wow, gosh, that's incredible. Do you
I
see
call it the everything bubble?
The everything, yeah, the everything short, right? Did you see what the Atlanta?
Yeah.
Sorry, hold on one second. You see what the Atlanta GDP, Atlanta Fed is saying about the GDP estimates, that they've completely revised them and reduced them?
I did see that, and so I think there was some misconception. I'd have to research this a little bit more, but I saw that they took it down, reduced it by 41%, but I think that 41% was off of the original. So it's not that they say that's going to go down 41%,
Correct.
But from the original point, right? If I was reading that. Okay.
Yes, but they did cut it from an estimate of 6.9 to 3.1. You make an absolutely valid point, but they had an estimate previously of 6.9, and they had to revise it, and they reduced that estimate by 41%. So basically what they're saying, the Atlanta Fed, the Federal Reserve Bank of Atlanta, is saying that they don't think that the GDP is going to be at a level of 6.9% for a seasonally annually adjusted rate. It's going to be at 3.7%, which is much lower.
That's still huge. That's still
right. And, yeah, but it's not saying
what you doing?
Right. And you know what? What's here's one thing is the actual GDP is down a lot more than 41% because last year or for the first part of this year, we were around almost 13%, 12 to 13%, GDP growth because of a lot of the government printing of money and stimulus spending. So it's actually down a lot more than 41% if you think about it. But this is just a revision.
Oh yeah.
This is just a revision. And this is the blue chip consensus. It's a range of the top 10 and bottom 10 average forecasts for blue chip stocks. That's a percentage gain average for the year. So they're saying that instead of getting an average of 7.25%, blue chip stocks, as of their most recent estimates in August, we're only going to get about 6.5%. And you can see that this line is just kind of getting steeper and steeper. And I don't think it's going to level off for a little while there. So.
Oh God, no. I mean, you have COVID, right? Like, COVID's not going away. Like, let's just face that
as
fact.
you look here, it says it does not capture the impact of COVID-19 and social mobility beyond their impact on GDP source data. So anything that they don't already know from that's happened yet, they can't put in their models.
I mean, they should be able to. Like, we've had it for, what, a year and a half now?
Yep.
So yeah, it's just gonna go down. And it's just a product of what's going on. I mean, it's a perfect storm. I mean, I link this back, history repeats itself, back before the Great Depression, we had the Spanish flu. And the Spanish flu was around for 3 years, I believe. So you figure that was 1918 to 21. You had the Roaring 20s, which actually, if you look into it, really wasn't that great in the financial side. Everyone was just, doing what they did. And then 29, the crash came. So it's history repeating itself.
Holy shit. It's the Great Depression 2.0.
It is.
Black fucking Tuesday plus Black Monday equals whatever the fuck day it's going to be right here. Someday in September.
It's so, and if you look at the other graph.
Got you. Schiller PE ratio. I love this thing because it's so fucking accurate and it takes inflation into account. The Schiller PE ratio is much better than the PE ratio because it takes into account for inflation. It was created by a Nobel Prize laureate named, can't remember his first name. His name was Schiller, obviously. It's also known as the CAPE ratio. Continue.
Well, and the fascinating thing with this, it wasn't developed until the 80s or 90s, and so they actually plugged all the data in from historical references, and it would have actually predicted the Great Depression and everything. Like, any of these massive.
It absolutely did predict it.
It's crazy.
Every fucking time. And what are we at today? Holy shit! Wednesday, September 15th. Yesterday, it went up almost 1%. The current Schiller PE ratio is at 38.7. It went up almost 1% in one fucking day. That is massive.
It's disgusting.
Holy shit. The only time it's ever been bigger, sorry, Kenna, the only time it's ever been bigger was during the .com bubble. Why do you think it was higher then, Kenna? I'm wondering.
Well, I mean, so you had all this new tech, right? Like, home computers really kind of came into the house late 80s. Early 90s.
Yeah,
like, I remember us having a word processor
late 80s when it was actually affordable, somewhat affordable for upper middle class households.
Well, I mean, yeah, because I remember us having a word processor, like the black screen, green text with the printers that were super loud and the tearaway paper. So those I remember us having, and then the regular computer PC came out. And there's just all this innovation. They were hyping it, and this was going to be the change of the world and all this other stuff. The internet came out. We had cell phones, those big brick cell phones, and it was just all of this craziness. And everybody wanted a website. That was the way to advertise, and that's how you got more traffic because you no longer had the magazines, the catalogs, or anything like that.
Yeah, that's true.
And so it went up, and plus you had the Clinton administration during that time, and that's when lending got very laxed on housing and credit and everything. That's why they always said, they gave anybody with a pulse a loan for anything, and so it just drove it all up. My opinion.
No, absolutely right. Yeah, your opinion's on point. So
And I say this as being 10 years old during the dot-com bubble.
I get it. I think I was I think I was like around 14 at the time, but I remember that, and I remember '08 as well, So it was definitely a tough time, for all of us. But take a look at the S&P 500 PE. That is also up. The current S&P 500 PE ratio is up almost 1% today, also 0.29 on the scale. It's at 34.95. And when was the S&P 500 PE ratio higher? 2008. That bitch was in the 70s. I mean, almost in the 70s,
Oh, yeah.
And
just keep padding
this
it.
is the
Just
third. This is the technically the fourth highest currently. Previously, it was only due to COVID in 2020 that it was higher, as well as the real estate mortgage-backed securities crisis in 2008 and the dot-com bubble back in 2000s. Is the only times it's ever been higher. The difference here is that we are carrying over all the issues from COVID in 2020 and all that debt. We are carrying over all the issues from mortgage-backed securities and CDOs and credit default swaps and everything else related, all these future contracts from 2008, where meme stocks have been being shorted since 2005. And then you've got other issues like the housing crisis the housing bubble that we've been pushing over since 2000, as well as when we had the Silicon Valley boom and the dot-com bubble. So literally everything that's happened over the last 20 some odd years is all coming together on to lay on to what's happening right now.
Well, don't forget about
reality.
the epic bull run that it's just been on. So,
Absolutely.
just factor that in. Because, I mean, it's really interesting. Like, if you pull up the S&P historical chart, right, it gradually goes up, and then if you get to the last year, it just rockets up for no
It's been
reason.
exponentially straight up.
And there's no reason for it because, you figure we had shutdowns, we had people without jobs, we had people on unemployment, we had people not spending money, we had people just mass chaos. And there was no reason for the S&P to be going as high as it is when there's not much money going into the economy, right?
Right. Absolutely. And speaking of that, I got something I need to show everybody. Let me see if I can get this quickly enough on the S&P. But here we had a green day today after four or five consecutive days. However, even though the S&P, the SPX was green today, everything else like the Dow, the Nasdaq, the Russell, they were all red. Okay, with some exceptions, except the Nikkei, which was recovering slightly from the Evergrande issue. So it's not looking good for America here, anywhere in the short term, especially with these issues that we've got occurring. So, Kenna, I just wanted to say thank you again for going over this. Is there anything else that you'd like to cover on this DD? Because I think you've done a wonderful job explaining it, and I don't want to leave out the military part. Do you mind just touching on that for us? Because we've got some fantastic individuals here, in the military, and 25% of all the proceeds of this channel are going to United States Veterans nonprofit organization this month. Anyways,
That's awesome. No, that's so good. Shout out to all the military guys.
And gals.
We're all family. You guys know that. And gals.
Yep.
I'm sorry. Yes. I say guys. Guys is my general term.
I understand.
Sorry. Guys and gals. Personnel, people. I don't remember what the PC term is anymore.
It's okay.
But no.
Who cares, right? Plug it.
No, I got heated with this because my husband was a crew chief for the Blackhawks. So one of those Blackhawks had his name on it. Not the ones that were over there, but at one point these Blackhawks had his name on it. And to see them kind of just left over in Afghanistan
Just
for it to
abandoned.
be picked apart or whatever.
And not just getting picked apart, and getting used and abused, right?
It was just,
they're using our shit
sad.
against us.
Well, and then you figure the piles of money that they found, all the guns that they found, and all this other, the vehicles and everything. So it ties into the, it's the last point of, military structure of Rome, right? They all the spending that we did for the military and everything, which is perfectly fine as long as we, get those things back, because, the taxpayers paid for that. That's just
Yeah,
more money
we
that we're
could
gonna have to
use
either
that
print
stuff.
or whatever. Yeah. And so
It's
I
hundreds of billions
looked
of
at this
dollars of
because
military equipment.
oh yeah, billions.
Look,
Billions of dollars.
what is
That's
this
the amount
expressed
of
in? How many millions and billions is this shit
no.
expressed in over here?
Yeah, so this is the number of items. So
Holy shit.
884,311 items were bought for the
Blow my mind.
war, basically. And this is only until 2016. This doesn't cover from 2016 to 2021.
When they really
right
ramped
now.
up.
Yeah, and so it really baffled me with the amount of money we literally just pissed away over there, and it weakened us. It really weakened us in the sense that now we don't have, we don't have those guns, we don't have the birds, we don't have the vehicles or anything, and on top of that, they now have it. Our enemies
And the
now
armor,
have it,
and the gear,
and they can
the
use.
heat gear.
They will now use it
everything.
against us.
Yeah.
Yeah, they can now. And it's just like, are you kidding me? You literally just weakened our whole stance, because now they can, they can send it, they can, sell it to China or whoever, and they can reverse engineer our technologies and things like that. And it's so infuriating. So yeah, that's the main
fantastic.
gist of that. Like,
Look at
it's
this.
billions.
You even
billions of
laid
dollars.
out the number and the type of vehicles: cargo trucks, 42,500 pickup trucks and cargo trucks. Armored for sure. 22,000 plus Humvees, ambulances, cargos, troop enclosures. Gun trucks, medium tactical vehicles, almost 9,000 of them, and that was only up until 2016. Since then, I'm sure it's exponentially higher. Over 1,000 unarmored recovery trucks and wreckers. 1,000 MRAP Max Pro mine resistant vehicles. Holy shit.
Yeah, and it's like you do, and I didn't want to even focus on the other part of this.
And
So
that's
like even in my
almost
even-
200 M113 fucking tanks. We gave Al Qaeda like 200s of tanks on top of everything else.
Yeah,
I
like,
wonder
and
how
I
many
didn't,
helicopters.
and then, oh, it's down there. It's
down there.
Just keep
Oh
going.
shit! Yeah, let's get to that. Oh my god, look at those numbers.
So,
That's like AMC's real share price. That's like GameStop's real share price right now.
that's just
Per
that's
share.
the cost for one.
That's the cost of
That's
each
the
one
cost
of them.
of
Huh?
one vehicle. Yeah.
And we all know that military spending is crazy, but when you start looking at it like that, you just start thinking, "Oh wow, that's an $800,000 truck," and they left, 22,000 over there. Oh, okay, cool. Yeah, that's crazy.
Yeah, the birds are down, and the drones.
Hell
There's
yeah.
the birds.
Helicopters, 110 choppers. That's crazy. I wonder how many of them were actually left over there, because there's no way they could get everything out. There's just too much
No.
gear for
No,
20-something years, 22, 23 years. No, actually longer, because America's been in Afghanistan for decades and decades.
Since the 90s.
Yeah, and I don't know if a lot of people actually still don't know this, but America actually gave Taliban the majority of their power, weapons, and money. Plain and simple. Back in the late 80s and early 90s.
There's the cost of the Black Hawk helicopters.
Thank
if you go up a little bit.
There it is. $2 million a piece.
21.
21? Holy shit. Damn, I must be stoned. Let me take another puff. And so these things range between over 21 to 37 million bucks a piece. And who's paying for them? We are, the fucking taxpayer, right? Insane.
Yeah, and so drones, I mean, you name it. And there's even more than that. Like, if you follow that Forbes link.
We
if you
lost
follow that Forbes
$174
link,
million
there's even
worth
more.
of drones?
Yup.
That's fucked up.
Yeah.
You guys need to go to the Bull House subreddit and drop this a like. Give this a read for yourself. This is an incredible amount of information.
So yeah, if you follow that link, there's even more from that
Oh,
link
yeah.
that I just couldn't.
This one
It
here?
was just too much. No. Up. Underneath the pictures, I have the
Gotcha.
link where I get my sources from.
Cool. Oh, that's very cool. Yeah, I see that. Yeah, no, this is perfect right here. This is fantastic. So, yeah, how would you recap that? What do you think? How you think America compares to the great state of Rome, the Empire of Rome.
We are Rome 2.0.
Yeah,
I mean, it's just
looking that way, huh?
craziness. Well, and you figure like the use of technology, computers and how fast, information goes now. It's very scary in that sense, but I also, it's not all doom and gloom on my part, right? Like I think we're in a very interesting time frame because we do have the meme stocks, right, which are the inverse to the economy, which is kind of funny to think about. And then you have the people that are holding these meme stocks, and those are people that want to do great things. And so,
yeah, I'd say the
I
vast
think,
majority of them do. I think you're absolutely fucking right.
because like you have, you're donating to charities, Bull House, 30% of whatever we make, whether it's from the magazine or the YouTube, we
That's awesome.
are, community driven. So whatever the community wants to go for, we will every few months donate 30% of whatever that is to their choosing.
Holy
So,
crap.
people want to do good, and I have faith that we will build the country stronger. But it has to, as I say, the economy is just as a life in itself, and it has to be able to breathe, and it hasn't been able to actually breathe, right? It's just been on this big inhale all these years. And so when it finally exhales, it's going to hurt. It's going to be ugly. People that aren't aware, it's going to freak them out. But that's where we all come in and we help teach. We help people see, like, hey, it's not over. There are ways to play this on the way down so that you can actually survive a lot of this.
Yeah, there's ways you can make money off the economy and stock market crashing, sadly. But we didn't create this fucking madness, did we?
Oh, heck no. Most of us were too young to even know what, the stock market was when all this started. So I think it's going to be good here soon. We have 7, if you look into the fourth turn. You've heard about the fourth turn, I'm sure.
The fourth term. Oh, what do you mean
Boss.
What do you mean the fourth term?
You don't know what the fourth turn is?
I don't understand exactly what you're referencing.
Okay, so there's I'll have to send you a bunch of links and stuff. So the fourth turn is cyclical events. It's a 20-year breakup. So every 80 years, it's based on like human lifespan, because the average human is about 80 years old whenever they die. But every 20 years is a different part of a turn, right? So right now we are technically in the fourth turn in theory, and it's the crisis turn. And if you follow that, we have about 7 more years of this turn before it actually becomes something good. And so the crisis, that's where you have wars, you have famine, you have disease, you have just hardship. It's literally hell on earth. And it's bad and it's ugly, and it's here. Like, we're in the thick of it right now. I always say that 2001 was really the big turning point for America, because that's when everything really started to decline. And that was in the third turn. That was part of the third turn. So that was feeding into the crisis. But the interesting thing with that is the ones that were born, the millennials, during the third turn, they were marked as the heroes. They were the ones that would come in and kind of save the world.
Fuck yeah. Fuck yeah, I like that.
So
Why not?
I'm gonna send you a video that'll go over it, and there's a book about it and everything that goes over the book. But yeah, it's cyclical events, and it was really interesting because I was writing my history repeating itself, because I noticed the pattern of the 20s, right? We always have some kind of financial crisis somewhere in the world during the 20s, during almost every century. So, I was like, okay, we're in the 2020s, we're seeing this financial crisis. I knew about 1929. Going into the 30s, that was a crisis. Come to find out, as I looked, 1820s was the first American Great Depression. 1720s, there was a depression, a financial crisis in London. 1620, there was another one in Europe, and it kind of goes back, and that's what led me to Julius Caesar in 33 AD.
That's awesome.
So yeah, it's a very cyclical event that we find.
That's fucking awesome. And it's time, right? It's time, and it's our turn. All of us, everybody.
It's our turn.
It's our fucking turn. Why not? You know one of the things that makes me think that is how badly over leveraged these fuckers are, and how badly of a situation Citadel Advisors is in. You want to see something cool I just found today? Take a look at this filing.
Yes.
This 13G filing. It's a beneficial ownership filing, right? I'm just going to pull this up for you guys instead on a picture that I already took that I already circled something on. This is the one. This is the filing here from September 7th, where Citadel Advisors, Holdings, and GP may be deemed to own 2.0 million shares of Class A stock. Okay. And then their most recent one, which was just a couple days ago, which was on September 13th, they increased Citadel Advisors, Holdings, and GP shares to $7.4 million. I'm sorry, 7.4 million shares, which is equivalent to, you know, probably hundreds of millions or maybe even billions of dollars. So I don't know if what this means exactly for these stocks, except that you can see that they're buying their own stocks, and they're able to use that in a way to make money on the way up and on the way down when certain meme stocks change directions. And I wanted to bring up something here in case you guys are unaware. They're IMM future dates. I got so much heat on Reddit for this. People hate me for this. Super Stocks banned me for this because I'm a dick, because I don't deal with those shills that are in there talking shit that don't know what the fuck they're talking about, because they don't read the entire post. And they read one little portion and be like, oh, you're wrong, this and that, you know, and that gets old quick. I don't mind constructive criticism, but there's certain things out there that are just facts. And there's something called IMM, International Money Market Swaps. All right, and this is it was created back in the 70s, and they're used to trade futures contracts and credit default swaps. Okay, plain and simple. What the fuck does this mean? You know, I think these two stocks, AMC and GameStop, are going to fly. I thought they were going to fly on the 15th, but I realized I forgot to take into account that the T+1 settlement probably mean that even though they have to buy them by the 15th, it probably won't reflect on the share price until the 16th or the 17th, realistically speaking. So,
and we have quadruple witching.
We have quadruple witching on Friday as well. GameStop,
which has never been
it's never been a good day.
It's not been a good day.
It never works out well for AMC or GameStop when it's quadruple witching, but who fucking cares? GameStop was up almost 3% on September 15th. AMC was down almost 8 or 9%. It was shorted all day and heavily manipulated, and it still rebounded. It gained all of its losses back before the end of the day, and it ended up with like a negative 0.5, negative 0.8% loss, which is absolutely nothing for a stock like AMC or GameStop. It's as if nothing had happened, because they shorted it, they lost a bunch of money doing that, and then they bought back a lot. They rolled over, I should say, and had to buy new contracts for these futures as well as the credit default swaps. And these 3-month euro-dollar contracts are used as the shortest maturity instruments on an interest rate swap that references 3-month LIBOR. So every 3 months they expire, and they're rolled over to include a new, longer contract. All right, these are a thing, okay? Investopedia, Fincyclopedia, all these guys have a lot of information based on them. It's based on maturity date. And when do they mature? The Wednesday of the last month of the quarter. But this is a little bit older. As of recently, they now only mature twice a year. That's in September and March on the third Wednesday. So twice a year. And you could see that here on Wikipedia under their IMM dates, where it says in December 2015, the roll has been reduced to semi-annual, only on September and March. So what this means that ever since 2015, it's actually gotten harder for them to roll their futures and CDS credit default swaps. So that's why these windows are getting smaller and smaller for them in which to do so, and we see certain things that we call cycles in the community. So a lot of people think it's a bunch of hullabaloo, but I disagree. These are fucking real IMM contracts that need to be rolled, and there's millions of them that have been in existence since the 1970s, and some of these stocks have been also shorted since 2005, 2010. AMC, GameStop, not financial advice. And Treasuries trade, at T+1, so we got to take that into advance. These are 3-month minimum, so some of them are T+90. Some of them are 6-month, so those are T+180. You know, and some of them are year, 3 year, some of them are 12 years plus. Okay, so you got to take into account that they have minimum lots of 250 lots for contract, and each contract represents 100 shares. So that's 250 times 100 that they have to roll over for each one that's under and up to 12 years old, and then 50 lot minimum contracts times 100 for anything that is still valid with remaining tenor greater than 12 years. So some of these fucking things are over 20 something years old, and they're still fucking rolling them. All shorts must cover and close out. All contracts must eventually buy or sell to close. Period. So I really do think strongly that we're going to see some really beautiful green price action over the next September 16th and September 17th. And you can hang me if I'm wrong. I don't give a fuck. But that's just how I feel. Like a lot of people are don't give dates. Dates are bad for the community. I disagree. I think that this is something like a prime opportunity to buy or sell some contracts. You know, to make some money, to to maybe pick up some shares, especially since they currently shorted the shit out of the stocks over the last, day. So there's a lot of opportunities out there, and dates are very fucking important. If you say they're not, I completely disagree with you, and you can fuck off right off my video and don't come back. So don't bet your life savings on it. Don't bet anything based on what I said. Do your own fucking due diligence. I would like to thank KENNA very much, El Corleone, Fund Reaper, Elmo, Trainman, and everybody else for being so supportive with the channel. Stocks are us. Alex, thank you for subscribing. Appreciate you guys. And everybody who has donated. Thank you very much, Leo. Leo Music, thank you for super chat and donating to the channel. Really, really appreciate it, man. And yeah, you're right. It was Nixon. I am not a crook. I guess not.
Oh, and I will say, boss, if you're having problems posting anything, you're welcome to post on Bullhouse. Like,
I appreciate that. I might have to take you up on that. I might have to totally take you up on that. And the Bullhouse is awesome. I'm going to have to start going over there and posting on there as well. I just want to, I've been sharing these to 20 different subreddits to try to get them out to as many people as possible. You know what I mean? So you know how it goes.
Oh yeah. I've been not really banned off of anything, but I'm very cautious. That's actually why we created the Bullhouse subreddit, was so that it was it's broad market, so you can post whatever you want. So if it's GME, if it's AMC, if it's crypto, whatever, DD is DD at this point with the entire economy.
I agree. It's all worthwhile if it's good,
100%. I do think you had someone asking you about September, if they are going to be on any, if they're basically not going to be able to pay our debts, if they're basically just going to go bankrupt in September for the debt ceiling. I can't remember where the comment was.
They can't technically go bankrupt, but they can default on the debt, which would be the interest payments that they have to other countries, which causes a lot of problems, which a country like China right now will be after their motherfucking money. So definitely would tank the stock market, in my opinion, and tank our economy and the real estate market and everything else along with it. Although real estate will take a little bit of time to catch up on that downtrend. But yeah.
Thanks for having me. I had fun.
No problem. Thank you much. Thanks so much, everybody, for coming. I appreciate you. The debt ceiling will probably not. They will not come to an agreement on the debt ceiling. It will become a huge issue. There's no possible way that they can come to an agreement on this $28 trillion debt ceiling, on this $3.5 trillion spending package, on the crypto regulations that are in it, and everything else that has been occurring in the country is going to culminate to cause issues. And they've had opportunities to get us out of this multiple times. Back in the 1999, when PBS, was displaying this on Channel 11, they were arguing, in Congress about $33 trillion in liabilities. And then in 2008, they were complaining that we had, $100 trillion. We've currently got $190 trillion because they've been doing the same shit that Bernie Madoff and the rest of these crooks started doing back in the 90s and even earlier in the 70s for the assholes in the Commodities Futures and Trading Commission. So, yeah, a debt ceiling default would cause a gigantic liquidation of assets and a lot of money being lost by hedge funds, market makers, banks, prime brokers, and a lot of them will go bankrupt. And that will force shorts to close, period. That will create a short squeeze that is more massive than has ever been seen in the history of the United States, and in my opinion of the world. It's going to be craziness. Do your own due diligence, and have a great night, everybody. Peace.
Good night.